Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is June the 30th, a little after 6 in the a.m. I didn't do a market wrap yesterday for members, so I figured, you know what, in addition to doing Swing Trading Today, which is where we review the pre-market activity, and we talk about the day's events and what's going to transpire, I figured let's do the market wrap live, which I don't know if I've ever done before, but maybe I did, somebody can correct me. If I did, it's been a long time. So, market wrap is where we review the closing price action of yesterday's charts of the major indexes and a few of our positions. So, let's get to it. This morning, we're going to get at 8:30 a.m. Eastern Standard Time the ADP report. That is a measure of jobs created as measured by ADP. And that sets the stage, the tone for what we might expect on Friday, which is non-farm payrolls. And that is the economic data that I like to call the Pimp Mac Daddy of them all when it comes down to economic data. So let's, in the back of our mind, let's keep those economic data points in mind. They can move the market. Tomorrow we get initial jobless claims as well. That can also move the market. The trend of late on the initial jobless claims has been trending higher. They've been expecting roughly 350,000 initial jobless claims the past two prior weeks. We've been getting in excess of over 400,000. Let's hope that drops down. Let's get to the charts. The closing price action of yesterday being Tuesday, the 29th. And we'll begin with the 10-year bond price. And while we closed up on the day, we did fade. We have been unable to close above this resistance level at, let's call it 15.5. That's really the line in the sand. I have it around 15.45, but it's 15.5. And despite the fact that the 10-year yield was able to close up higher yesterday, technology did very well. Now, that story may change a bit if in fact we do get a rally above that 15.5 mark. Until then, game on to the long side for technology. Now, taking a look at the TLT, which is kind of our counterbalance. We take a look at the yield first, then we take a look at the bond price. For those out there saying, why is this guy talking about bonds? He's supposed to be talking about stocks. If you want to know where stocks are going, you need to pay attention to bonds. You don't have to know everything about the bond market, but having an understanding of exactly where bonds are going can give you an edge over other traders. Now, taking a look at the TLT, unlike the yield, we broke out to the upside. Both were up yesterday, which is kind of odd, because normally they would trade inversely. Granted, they are two time frames, different time frames, but generally they trade inversely of one another. And you could see that we broke out yesterday. What that would lead me to believe is that we're going to see a continuation move higher on bonds, meaning a continuation lower on the 10-year yield. We continue to see higher lows, higher highs. Hey, Tommy, good morning to you. Yes, please smash that like button, please. Thank you very much. Continuing on with bonds, the tips is your Treasury inflation protected securities. Now, all you're hearing out there lately, the narrative is that there's deflation. We went from overnight we went from inflation to deflation. That's not what the tip market is telling us. The tip market, which are Treasury inflation protected securities, if you're buying them, you're hoping that they will hedge against inflation. If you're buying them, that means inflation is here. And it's usually not mom and pop buying 100 shares of the tips. It's usually institutional money flowing into the tip market. Now, while we've seen some volatility of late, such as here on the 11th. A lot of volatility in June. Here, really here, on the 16th. Here, again, bearish reversal bar, break of support on the 24th. Buyers have stepped in. There's a bid, a huge, huge bid under the tip markets. Big Bear, good morning to you. So, any talk of deflation, if there is deflation, I won't argue that commodity prices have come in some. That's not arguable. But any talk of inflation being a long-term prospect that is no longer a concern, the bond market's telling you something completely different, at least the tip market. As for the dollar continues to press up higher, despite the fact that bonds are pushing lower, and one would expect that. You see, excuse me, I said with bonds, I meant bond yields. You would think that the dollar may weaken up due to the fact that, perhaps there's underlying growth concerns that may be hampering the economy, and that might push the dollar lower, but that's not the case. The dollar's been pushing up higher. And it looks as though, let's memorialize this, given the RSI, given the stochastic, each are pressing up higher lows. They are jacking the dollar up higher on price. Looks like a short covering rally a bit, but net, the indicators look strong. Price looks strong, with the exception of the fade off the highs of the day. Volume dropping off a bit, but we've seen a lot lower. So while I would love to see a break in the US dollar, a move lower on the US dollar, because it would help our commodity plays, we don't speak our book. The path of least resistance at current appears to be to the long side for the US dollar. The VIX. Now here's where things get really, really interesting. Remember last week, let's go to a weekly chart really quick. Last week, we had a massive outside reversal bar on the VIX, the volatility indicator index, and it completely engulfed the prior week's breakout. I mean, this is shockingly bearish price action on the VIX. But take note of RSI. We continue to put in higher lows, no breakout yet. We had broken out, then we failed, but higher lows. This week, while yes, we did put in a new weekly low, we're up on the week. Higher lows, stochastics. Remember, this is a weekly time frame. And we appear to be breaking out to new higher highs. So the question I have in the back of my mind is this: are we seeing a strong compression area here build on the VIX? We've seen this before, right? You've seen it back here, leading to the COVID sell-off. You've seen it back here, leading to this 1 week gap up higher back in January. We won't know until Friday afternoon if we close up higher, whether or not we are ready to see another surge higher on the VIX. Now, when you take a look at the daily chart, I put this arrow up here, I believe it was on Monday's market wrap, and discussed it with members to watch out for a hooking up, a loss of momentum to the downside on the VIX. And sure enough, yesterday we had a bullish reversal bar. We were down big, really, really big. And then we reversed to close back up to recapture this support level. What is this telling us? It's telling us that there's a bid under the VIX, and that we may see some pressure on equities. And I pointed this out as well the other day. The fact that we had broken out on the VIX, we pulled back, and usually with the VIX, and most indexes, let's face it, when they go down to 20, they'll cross down below it because it's a sign of weakness. Weak stocks, weak indexes, whatnot, they tend to get weaker. But in this case here, what we're doing is we're consolidating above the 20 mark. We're not pressing lower. It's very similar to the price action we saw back here in September, then October double bottom setup in in 2020, not early 2020, mid 2020. And then that led to a rally, not a huge rally, but a rally nonetheless. Might we be seeing the same right here? Perhaps. So keep an eye on the VIX, very interesting price action. The Dow Transports, looking good. Daily chart, inside day yesterday, threatening a breakout. Now I think what'll help the transports is if you get a jack up higher on yields. If yields begin to move up higher, that's a sign of expansion. What might help with that narrative? The ADP report this morning. And if it's validated by a strong jobs data report on Friday, you may see a jack up higher on yields. And if you get that, expect a bid onto the transports. Now moving on to the S&P 500 daily chart. I'm not loving this chart. You may be saying, you're a madman. We're at all-time highs, dude. What's wrong? Sure, Tommy. Yeah, we'll definitely go over them, pal. Why would I dislike this price action when we're at all-time highs? The reason is that this price action is that of a short covering rally. There's a lack of conviction here. It's very consistent with topping action. You get these filled candlesticks. I talk about this all the time. Go back in history. Don't listen to me. Watch what's happened in the past. When you get this type of price action, it usually doesn't end well. Many times you'll get a boost up higher on economic data or strong earnings, what have you. But many times you get a failure, a rollover, just as you saw here. Similar price action. Here, similar price action. Does it mean that we're going to crash? No. We just pulled back, we retested it, then we moved up higher. Back here we had a little bit more of a correction, then we moved up higher. So this is not the best of price action. And volume is not wonderful. And yesterday was particularly light. RSI failing as we press to new all-time highs. It's failing to really break out here. So, warning flag on the track for the S&P 500. Moving on to the Dow Jones. Now, you think about it, you have the Dow Jones, which is stuck in a trading range. Now, granted, I will say this, that while I'm not loving yesterday's price action, I could see a W formation forming here. What does that mean? It means that we're building a potential base. Here's your left side of your W. Here's your pivot point, right side. There was a bid back here. I mean, we broke down hard. However, there was no continuation move lower. In fact, they jacked it back up. And now we're looking at a potential breakout here on the Dow Jones. Going back to what I was talking about earlier, what could make the Dow Jones move up higher, similar to the transport? Look at the 10-year yield. If yields move up higher, that will send the Dow Jones higher, the transports up higher. Why? It's an indication of expansion. Now, if yields continue to decay, then it becomes all the more difficult because the narrative is not there. The story is not there for traders to buy into that, you know what, we're seeing economic growth. JA, when is COVID going to end? Really enough, I agree with you, brother. You know, you're hearing more and more stories coming out of the UK and South America and Israel about the Delta variant. Everybody wants to talk about a variant now. To be perfectly honest with you, I don't know. I hope soon. I really do hope soon. I share your fatigue with it all. But I think that there's far too many people out there that love the control. And if I talk about it too much here, they will ban this video. So I'm going to respectfully say, you know what, I'm going to stop talking about it. Don't take it the wrong way, pal. Just the society we live in nowadays. Moving on to the triple Qs. The triple Qs, a fantastic price action here. Really, really strong. But if we do, going back to the 10-year yield, if this does break out, then you're going to see a lot of pressure on the Qs. Right now, the Qs are rallying for a couple of reasons. One is a bit more nefarious, but I'll begin with the first one. One, the 10-year yield is moderate. It is not at a level where technology growth, beta stocks come under a lot of pressure. We've seen that pressure come off a bit, allowing for expansion. Two, we have earnings season coming up. Now, the baseline of Q2 earnings is going to be very, very favorable towards tech stocks due to the fact that earnings should, relative to year over year, come out a lot more favorable. We're coming off of ridiculously compressed levels. I'm not that excited about earnings per se, but they'll rally them into earnings just to get the narrative going, get everybody's excited. You're watching Fox Business, CNBC, they want everybody excited moving into earnings. They're going to telling you to buy stocks into earnings, and you don't buy this into earnings. You're going to get monkey hammered. So the more nefarious theory I have is that with all the language coming out with regard to the variance, that we may be seeing a move higher in the stay-at-home stocks. For example, I haven't checked this out. This is just a theory that I have. Zoom is the pimp Mac daddy of them all when it comes down to stay-at-home stocks. And look at what it's doing. It's ripping up higher. Well off of its highs, but it's having a heck of a nice rally here. So, again, it's a bit more of a nefarious theory that I have about why the Qs, why technology is rallying, because of all the conversations with regard to how do I put this? The new variants of the common cold that's going on out there, so I don't get banned here today. So read between the lines. IWM, small caps, of which we have a short position. And to be transparent, I have a short position here on the Qs. The IWM, we're not seeing a continuation breakout. In fact, you could argue that we broke down below support yesterday. Let's just say we closed at support. Let's be conservative. We closed at support, the 20-period moving average on a daily time frame, acted as support. I will point out, though, that what you're seeing on RSI are lower highs, stochastics lower highs, clearly Stoch RSI lower highs, but we don't want to speak our book. Volume was very light to the downside yesterday. We are seeing ultimate oscillator, higher lows, potential move up higher. If we do see strong job gains, if we do see a breakout on the 10-year yield, then you should expect to see strength in the IWM. So right now, I would not go adding to a short position. I have my finger on the eject button if in fact we do see a breakout. The fact that yields are fairly benign right now, economic data fairly benign, yet we're not seeing a breakdown on the small caps, leads me to believe that if we see a jack up higher on yields and strong economic data, that in all probability you're going to see a breakout on the small caps. But right now, We are playing it close. Let's go to a 4-hour chart just to see how we close out the day. Yeah, we broke down on a 4-hour time frame yesterday. Lower highs here. So the jury is out on the small caps numbers, more to come. Morgan Stanley, I didn't want to go over, did I want to go over? I want to go over the banks. There we go. I was very surprised yesterday that the banks, at least the XLF, a couple of the money center banks like Goldman Sachs, Morgan Stanley had very strong days yesterday. The however is the overall index did very poorly. We had an outside reversal bar, down 1/3 of a percentage point. We were up. We opened up. And this is why I mean it closed poorly. It wasn't a huge percentage down day. It's just the price action leads you to believe that, you know what, we may get more of a pullback here. So, is this ready to be bought? I think you need to go company specific. I think I like Goldman Sachs, and in particular Morgan Stanley, versus the XLF. Volume rose above average. The technology sector, very strong day, up nearly 3/4 of a percentage point. Volume light. And again, folks, the technology sector is going to trade along with the trip Qs. Very similar charts. But once the Qs go, expect technology to roll over. Consumer discretionaries. A strong day yesterday. 1/4 percentage point move. Stokes looking good. Volume dropping off. MACD histogram leveling off. So I'm not that excited about consumer discretionaries, especially if yields press up higher. Energy. You know, you need to, if yields begin to move up higher and we begin to see strong jobs growth, the energy sector, the energy complex is an area where you need to start looking to buy this pullback. Now, there's no doubt we may have more of a correction here. Lower highs on our stochastics, same deal on RSI. These are momentum indicators, so obviously momentum is waned here as the prospect for stronger economic growth and a pullback on the 10-year yield have wavered some. But if that switches around, well, then expect a breakout on energy. Lower highs on Stoke RSI. Volume was very light despite horrible price action yesterday. So that's a good sign. So we remain in a flag formation. I think that it's fair to say that it's a bull flag setup and we're looking for a continuation breakout. We are nearing the lower band of the bull flag setup. Just watch these Stokes. I have a rule that when Stokes go down below 50, I don't buy stocks. I usually avoid them because rallies tend to fade. That didn't happen here, but that was the exception rather than the rule. If you go back in history, you'll see that is the rule. So just be careful. Emerging markets, a reversal day yesterday. They couldn't close them positive though. I think that once the dollar begins to roll over, then we need to step in and buy emerging markets. Brazil in particular, you should expect to see a rally in commodities yet again as the dollar rolls over. We're not there yet, so therefore we don't want to buy Brazil. We don't want to buy commodities right now. They're on sale. It could get cheaper. Now it's Tommy requested, I believe it was Tommy. We're going to talk about silver and gold. Now on Monday night, I warned members that I did not like gold, I did not like silver, that I thought that we would roll over. Because this price action, I don't think I used these words, was a dead cat bounce. In fact, I know I didn't use those words. But I did not think that this rally was going to hold, that we were going to break. Now, what's disappointing here is that what I was hoping for, and hope is not a strategy, was that we would hold this low, last seen on, let's get the date, so if you want to pull it up at home. This low on the 18th of June that it would hold, and the low was 164.87, and we closed just shy of it yesterday. So not wonderful price action. Is the selling in gold over? Probably not. I think that we could see a little bit more weakness here. We're rolling over on the RSI. We're rolling over on our Stokes. What you're looking for now, before you go stepping in and buying gold, is you're looking for a setup like this, right here. The March Stoke setup. When you roll over below 20, it's usually a vicious sell-off. Like you saw. Look at this price action here. But it led to a beautiful rally. You're going to get a washout. Is the washout over? I'm reluctant to say that. So just keep in mind that while the ruthless sell-off is horrible to live through if you're long, the rally out of that sell-off is usually very strong. So if you have the tenacity, hold on, or sell covered calls on your position to at least generate some income. I can take a sip of coffee here, pardon me. Another strategy would be that if you're looking for lower lows, you want to get a discounted price. Well, identify a support level, like a 162 on the GLD, and sell a naked put. And that way, if the shares are assigned to you, you get the shares at a discounted price. So, yet again, I'm still concerned about the price action on the GLD. More to come here. Let's talk about silver. This is the AGQ. We have a position here on AGQ. We have not added on this pullback. I mentioned this yet again the other day on Market Wrap Monday. I did not think that this rally was going to hold. I thought we were going to break. And there's the break. Did we arrive at a support level yesterday? We did, but we broke it. $45 per share was support. Where do we close? $44.91. So in both cases here, the price of silver, the price of gold, both of which I'm long-term bullish on. Short-term, not wonderful price action. Might they pop up higher today and display a good counter-trend rally? Absolutely, sure. But let's watch and see how they close out the day to identify whether or not it's time to buy. Are they flashing bullish key reversal patterns on strong volume above support levels? Those are the questions that need to get asked. And if they are, then we'll consider adding to positions. Until then, avoid. Now to the gold mining stocks, I think that we're far closer to a bottom than we are than on the price of the metals. Now the GDXJ, these stokes are at really nosebleed oversold levels. Look at this, 2.50 on the stochastics. I mean, talk about throwing the baby out with the bathwater. It's crazy. Let's go to a 2-year setup. And you can go back, this is a 2-hour. Daily chart, you get this, Bob. It's not too early. I still have my first cup of coffee, folks, so bear with me. 2 years, good. Okay, if you go back in history, I mean, we are at levels not seen on stochastics since September of 2019. So we should see a pretty nice rally here off these lows in the next few trading days. Let's go back to our pre-filled shorter duration time frame. Yeah, Tommy, the stocks are really, really oversold. RSI still trending lower, but we're down below 30 on an index of stocks. Granted, these are the junior miners, far more volatile than the GDX, which are the seniors. But these two are very oversold. And I mean, how many days have we been down out of the past 10? I mean, since June the 16th. Actually, let's take the month. Let's say it's the 30th. So let's go over the past 15 odd days. 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the past 14 days or so have been down. Granted, you have weekends involved. I mean, you get my drift. This is really a really nasty sell-off on this deflationary scare for gold stock. It leads me to believe that we're going to get a nasty counter-trend reversal. Is it the bottom? Not quite sure. You need to look at the weekly charts, and we'll talk about the weekly charts tomorrow night on Thursday Night Stock Charts Live, and then again on Saturday. We'll take a look at the weekly charts with members to decide how we want to position for the new trading week. NUGT, these are the senior miners as well, but this is a leveraged ETF. Now, we did see a breakdown yesterday, but what keeps me optimistic about the seniors is this. I set up some alerts which fired off yesterday on, and this is what I love about TrendSpider. There's a link below, 35% discount code below. When you take a look at the daily chart, you can see I had an alert here and I had an alert here. They both fired off. I expected lower lows, but what they did yesterday is they gapped it down right into my alerts, actually below my alerts, but then they rallied back. So we broke not one support level. In fact, I believe I had it set up not on a daily time frame, but on a 4-hour time frame. Yes. And you can see that we had a nice reversal bar off the lows yesterday morning. And to me, when you start seeing, especially sequential reversal bars on a 4-hour time frame, it probably means that you have some bargain hunters in there. They're bidding up the shares. It doesn't mean there's a bottom yet. It just means that a lot of the weak hands are now out, especially on a gap down, as you saw yesterday. We gapped down about over $2 a share, and that scares the living daylights out of the weak longs. And I think that we may be, at least on the gold miners, seeing a bottom being put in. Now, what I do want to point out, going back on seasonality, as we proceed into the summer months, seasonality changes from unfavorable in June, at least on NUGT, which is generally down or up only 45% of the time. That changes in July and August. August in particular is interesting in that last year, remember, gold put in an all-time high, a closing high, August of last year. So we're heading into a seasonally favorable period of time. So I think that those that ignore this nasty sell-off and those that ignore the signals that the market is sending that these stochastics are at ridiculously oversold levels, we're at support. And yes, we broke one support level yesterday, but we hit another and reversed off of it. Volume is dropping off sequentially. I think we're seeing a bottom getting put in here. And in fact, take a look at your ultimate oscillator lifting off. We were in a nasty downtrend. Now it's beginning to hook up. Is it the ultimate bottom? We don't know yet, but it's looking pretty good. What else do we want to talk about here? Coinbase, we're long with that. That ripped up higher yesterday, up 3 1/3%. We sold off the highs of the session, no shock. up and into the third standard deviation Bollinger Band, and that saw some selling. I think that we're probably going to get a little bit more of a pullback here. That pullback should be bought. Very bullish on Coinbase. Airbnb, I was surprised yesterday. We saw a pullback. We broke support. Might we pull back to the 141 level yet again to retest? Sure. Let's just make sure we hold it before you go adding more to positions. Intercontinental Exchange, of which we have a position long. If we get a new daily low, let's just stop out of this, book our profits, move to the sidelines. And with that, let's take a quick peek at the opening price action. NUGT gapping up in the pre-market. I'm sure on very thin volume here. Yeah, very thin volume. Let's not even talk about it. It's not even worth it. Let's take a look at the US dollar. This is a 30-minute time frame. Let's go to a 4-hour time frame, and then we'll drill down as necessary or drill out as necessary. The dollar is up this morning, but it is coming under pressure. Take note of this. We moved up higher, but we put in a lower high than what we saw on the 18th of June. And we're kind of stuck at that resistance level. But we don't have a breakdown yet. We don't have a lower low. We just may have a lower high, but no lower low. And you could argue, and believe me, I want the dollar to break. For my positions to do well, I need the dollar to break. But we don't speak our book. That's not right. We're not CNBC. What we could be setting up for here is a cup with handle formation to be completely transparent, open, honest, unlike what you get on the mainstream media. And you can see it here. Let's pull back a little bit more. Cup, handle, potential breakout. We're not there yet. I will point out we are seeing lower highs on RSI. If we get strong ADP numbers, expect a rally in the dollar. If we get weak ADP numbers, well, we may see a pullback here. I say may because traders may hold out on selling until they get the non-farm payrolls, which come out on Friday. And if they disappoint, well then you may see weakness in the US dollar. Why? It's because it's an all clear that the Federal Reserve won't raise rates, can't raise rates. Let's take a quick peek at gold in the pre-market. When I looked earlier, it was down about $6, just shy of that. We've rallied off the lows of the session, now down about a quarter percentage point. Still on a 4-hour chart here. We have an inside bar. This bar opened up at, I believe, 5 a.m. Yes, 5 a.m. No new high yet. We may have a higher low on price on a 4-hour time frame, but no new higher high yet. So to buy gold now is to hope that it's going to continue up higher. It's fine if you want to nibble, but if you're going to go jumping in with both feet, it's a highly risky trade. We have a tight wedge formation here. You want to see a breakout on gold, and ideally a retest of the breakout point here in green. Meaning we break out, strong rally, pull back, retest. What was resistance for the past several days will then act as support. We're not there yet, way too early. It's only a watch. Bitcoin. Ooh, look at Bitcoin. Now here's a case where Bitcoin did break out. This is what we're looking for on gold, is a breakout and a pullback. That, however, is that with Bitcoin, that retest failed. We did not hold the breakout point, which we saw on the 29th. And that failure is being rewarded with a lot of selling. So Bitcoin down nearly 4.5% in the pre-market. Let's take a look at equities in the pre-market. S&P 500 off session lows, they're about flat. Cattle, I didn't want to click on this, but since I'm here, I'll take a look at it. Cattle was looking good for the past couple of weeks. It's consolidating nicely. The path of least resistance remains higher here. This is where I really wanted to click on. The Russell 2000, down a little more than 1/3 of a percentage point, struggling to hold support this morning, but we are reversing off of this support level, down a little over 8.5 points on the Russell E-minis. The NASDAQ 100, off session lows, but I will point out, we have a breakout point failure here. We broke out here, just as we did here, and then we broke back down. We did it again. Let's drill down here. 30-minute chart. You can see how they defended this lower band of support. This leads me to believe that we may see a rise in yields this morning. Let's check out the 10-year bond. Nope. Oh, I see. We're coming off session highs. We had a down bar here. We're coming off session highs. Perhaps the weakness on the NASDAQ is a fear that we're beginning to see weakness on the 10-year yield. If we get that weakness, that'll mean a rise in the 10-year Treasury yield. And we are very overbought here. 30-minute RSI is at 74. Where are we on a 4-hour time frame? Not too bad. Still a strong chart. You're taking a look at it. The 10-year Treasury note on a 4-hour time frame. Beautiful stair step higher. It's a really good looking chart. So odds continue to favor bulls for bonds. All right, I'm a little bit long on the tooth here. Let's go over Apple for JA. Let me see if I have any chart requests. Bear with me 1 second, folks. I need to jump into the website members area and check that out. As I'm waiting for that page to load, let's go over to here we go. All right. I don't have much to go over here today, which is good because I'm losing my voice. Apple. Let's go to the monthly chart. Ooh. Apple looking really good. Arena of Idea Racing. Love your channel, sir. Thank you very much. I appreciate that. FNKL. I'll take a compliment and go over a chart any day. Apple, very, very nice monthly breakout here. Strong. I don't know why my alert didn't fire off. I think I may have set the time frame up wrong. Oh, I did set it up wrong. I didn't set it up for a breakout. My bad, don't blame TrendSpider. Let's reset it. Oh, actually, I did set it up right. It just didn't. I know what I did. The last time I looked at this, it had already broken out, and I'm looking for a pullback and a retest. And for those not familiar with how we trade earnings, we trade earnings soon. And we're not going to be buying any common stock, nothing like that, but we will be trading options using the strategy called strangles. And we did very, very well last quarter. Apple is certainly one of the names on the list to trade. Monthly time frame, Apple looking very strong. Weekly time frame looking very strong. In fact, these are where the automated trend lines come in handy. JA in particular. I'm going to take them off. You wouldn't know there's resistance above there until you do this. Click of a button. And there you have it. Where are they pulling that data from? They're extrapolating out these resistance levels back here, carrying it up and through to present day. And now we are trading up and above resistance. The question is, do we close there, right? This is a weekly chart, so we don't want to buy in anticipation of a breakout on a weekly time frame above this resistance level. That would be hoping that we close out the week above it. What we want to do is create an alert letting us know that we're testing that support level. And we want to know, does it hold? In short, does it hold? If not, then we avoid. We wait for it to pull back to our monthly support level if it does not hold. That's how we manage our risk. And again, folks, there's a 35% discount code below for TrendSpider, automated technical analysis. And I want to go over their seasonality in a moment as well. So the key is the question that we want answered by the end of the week. Do we close above this resistance level or do we fade? Let's check out the daily chart, see how we closed out yesterday. That'll give us a clue of how we close out the week now that it's hump day. Why is this doing this? There we go. That was strange. Very strong price action yesterday. Very, very strong price action. The only negative I'll put on the table is that volume was below average, moving averages in blue, but we did rise versus the prior day's volume. So really a nice looking chart. Higher lows and RSI, no negative divergences, no bearish divergences. RSI is validating the push up higher. You're very welcome, Marina. Now, taking a look at seasonality, let's use a 12-year time frame. Get a little bit more data in the mix here. Because July, if you're using a 10-year time frame, I mean, by far the best month out of the year, by far. But let's throw a little bit more data in there to see if it actually gets better. Look at that. So we're heading into a very, very seasonally strong period of time for Apple. And by far the most strongest time of the year. So strong seasonality, strong price action. So the path of least resistance remains higher for Apple. Let's take the last symbol up for Arena of Idea Racing. You gotta tell me the story behind that name one day. FNKO. I haven't looked at this one in a while, so let's just monthly chart. Not looking good here, brother. Bearish reversal bar. Well, we're just off the lows of the month. If you're looking for support, it's at around 20 bucks. Now, you could argue that we haven't broken support yet. I'm not a big lover of that argument. I don't like this chart at all. You know, there's not much time. We have 30 days. No, this is it. This is the final day of the month. It's got to do cartwheels to save the month today. And we broke down on the 14th. This is a weekly chart. Broke down below support. Attempted to recapture and did recapture. What did we do this week? Failed to hold. Daily chart. You know, it's not a bad chart. We're holding on to support on a daily time frame. I don't think we had a new daily low yesterday. Low yesterday, 2134. No, the day before was 2134. We met the prior day's lows. That's bullish. I just don't like that monthly chart and the weekly chart. I think you have, at a bare minimum, more consolidation here, and at worst case, you have more downside. Watch that $20 mark. If we do get more downside, I think that's your best risk-reward entry point. And with that, folks, everybody you're very welcome. Everybody have a profitable trading day, and stay out of the heat, and enjoy the weekend. And join us on tomorrow night, Thursday night, Stock Charts Live. Click that bell button or use the link below to get added to our 15-minute alert list where we send out an email 15 minutes to a half hour prior to us going live. You're very welcome, Maria. Anytime, my friend. Thanks for joining in, and be well.